It all came crashing down in his own penthouse. His own sons were the ones who reported him after he confessed on that cold December night in 2008.
It's one big lie. Basically, a giant Ponzi scheme that I have been running for years with no real trades behind it at all.
His clients believed they held $65 billion in their accounts. Every dollar of it was completely fictitious. There were no investments and no trades at all. The man who chaired NASDAQ. The man everyone trusted. How did this fraud survive for decades? And why did the system never once make the one call that would have exposed it all? 12 March 2009. Bernie Madoff stands before the judge in federal court. He has already pled guilty to all 11 federal felonies without any defense. The judge will call it extraordinarily evil. But first, we must go back. Back to a beach in Queens where it all began with $5,000 saved from lifeguarding and installing sprinklers. 1960. Bernie Madoff launches his firm with that lifeguard money and some sprinkler installing cash. He builds a legitimate market-making business that pioneers electronic quotes. He pioneers electronic trading, becomes one of the largest independent market makers, serves as NASDAQ chairman 3 times. Wall Street royalty, whose reputation seemed beyond reproach. But downstairs on the 17th floor of the Lipstick Building, something very different is happening, behind a locked door. Even family members were not allowed to enter. This was the paper factory where the fraud lived unseen for decades. A separate advisory business was promising those steady returns of about 1% every month, almost without exception. It stayed strong for decades, regardless of market conditions. The smooth gains hid the truth from all who looked at them. The strategy sounded smart on paper. It was called split strike conversion. You buy a basket of blue chip stocks, collar them with options for protection. Safe, consistent gains. But was this really possible for such long periods at that scale? But one Boston quant took 4 hours to prove those returns were mathematically impossible. He told the SEC, repeatedly. What happened next? This is the machine that made the whole fraud possible for so long. Client money flows into one single Chase account, the famous 703 account that held all the real cash. New deposits simply paid the old withdrawals. No trades are ever placed. Frank DePascali and the small team on the 17th floor simply pick historical prices after the fact from newspapers and data feeds. They create perfect statements that looked completely legitimate. New deposits pay the old investors. Classic Ponzi. But the returns looked so believable, so smooth, and coming from the former NASDAQ chairman who had sat on committees about market integrity. The auditor? A one-man shop in a strip mall. He took Bernie's numbers at face value and never verified a single asset or trade confirmation, despite the billions reported. 4,800 clients had invested with the firm by November 2008. Feeder funds funneled billions more and collected substantial fees along the way. Everyone believed the numbers were legitimate. The illusion was perfect, until reality struck. Even when Barron's and MAR Hedge published skeptical articles in 2001, asking how those returns were possible without any visible risk. Still, nothing happened, and the scheme rolled on for years. What would it take for someone to finally listen to the warnings? Harry Markopolos sent the SEC a 21-page memo literally titled, "The world's largest hedge fund is a fraud." They filed it away. Would anyone ever listen to his warnings? 6 times over 16 years, the SEC examined or received complaints. They caught him lying under oath about custody of assets, still closed the case with no finding of fraud at all. They never once called the depository trust company to verify the supposed positions. That single phone call would have ended it immediately by showing there were no trades. 2008. The financial crisis hits hard. Investors demand $7 billion in redemptions all at once. The 703 account holds only a few $100 million. How could the math possibly add up any longer? 10th of December. Bernie sits his sons down in the family apartment. He tells them the truth about the business. They do the only decent thing left to them. They call a lawyer and then the FBI that very night.
There is no innocent explanation for any of this. The entire operation has been a fraud from the beginning.
On the 11th of December 2008, FBI agents arrive at the penthouse. Bernie is arrested right there. The largest Ponzi scheme in history is finally over after running for decades. This came after the sons reported him immediately. The real principal lost was $17.5 billion, according to the trustees' careful accounting. The rest was all phantom wealth created on paper that never existed in reality. Was there any way for victims to recover from such a massive hole? The gap revealed the true scale of the deception. Irving Picard, the trustee, spends 15 years clawing money back from those who withdrew fake profits. $14.8 billion recovered from banks, feeders, and early withdrawers who received fictitious gains. Combined with the victim fund, most victims recovered over 90 cents on the dollar. The most successful large fraud recovery ever seen in history, despite the enormous scale. The man who fooled everyone died in federal prison in 2021 after asking for compassionate release that was denied. But how much had the victims ultimately recovered, despite everything? His sons Mark and Andrew reported him. Mark later died by suicide on the 2-year anniversary. Andrew died of cancer in 2014. A family destroyed by the lie that built it. The strangest twist? Most victims got most of their money back. Not from Bernie, from the system that failed to stop him through years of determined clawbacks by the trustee. Reputation became the perfect cover. Smooth returns the perfect drug. And nobody wanted to believe the chairman of NASDAQ was running a fraud all along. You're the most respected name in finance. Your fund is collapsing. Do you confess to your sons or try to buy one more month of silence? The lie lasted for decades, just as those closest to it later admitted under oath. Yet amazingly, the recovery continues today, with final distributions wrapping up in 2025 and most victims over 90% whole. The clawbacks brought real justice years later. Do you confess to your sons or try to buy one more month of silence? Tell me in the comments. Next, how the last $5,000 saved at a blackjack table built FedEx.